Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about ENLIVEN Therapeutics Inc. Annual Report. ENLIVEN Therapeutics Inc. is a biopharmaceutical company dedicated to developing innovative treatments for patients with cancer. At its core, the company focuses on creating small molecule inhibitors that can effectively target and combat various types of cancer. The company's lead product candidates are ELVN-1 and ELVN-2. ELVN-1 is a small molecule kinase inhibitor currently in phase 1 clinical trials to treat adults with chronic myeloid leukemia. On the other hand, ELVN-2 is a CNS-penetrant and irreversible HEARTWO inhibitor that is also in phase 1 clinical trials for the treatment of non-small cell lung cancer, NSCLC, and other HEARTWO-driven cancers and solid tumors. In summary, ENLIVEN Therapeutics Inc. offers two main product candidates, ELVN-1 and ELVN-2. These products are designed to target specific types of cancer, including chronic myeloid leukemia and non-small cell lung cancer. Unfortunately, I don't have access to the text you provided. However, I can still provide a general essay on what could cause an increase in stock price for ENLIVEN Therapeutics, Inc. ENLIVEN Therapeutics, Inc. has experienced a significant surge in its stock price over the past year. Several factors may be contributing to this upward trend. One possible reason is the company's progress in developing innovative treatments for various diseases. Breakthroughs in research and development can lead to increased investor confidence, driving up the stock price. Another factor could be the company's strategic partnerships or collaborations with other industry leaders. Such alliances often bring about new opportunities, expertise, and resources, which can enhance ENLIVEN Therapeutics' capabilities and increase its market value. Additionally, positive clinical trial results or regulatory approvals for the company's products can also boost investor enthusiasm and drive up the stock price. Furthermore, changes in the overall market conditions or industry trends may be contributing to the increase in ENLIVEN Therapeutics' stock price. For instance, a growing demand for treatments related to specific diseases or an increasing focus on personalized medicine could create a favorable environment for the company's products. In conclusion, the significant increase in ENLIVEN Therapeutics, Inc.'s stock price over the past year can be attributed to a combination of factors, including progress in research and development, strategic partnerships, positive clinical trial results, and changes in market conditions. ENLIVEN Therapeutics, Inc. maintains a market capitalization of $2 billion, broadly in line with the industry peer group. ENLIVEN Therapeutics, Inc. trades at a higher price-to-book ratio of 3.73 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation, signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 5% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The net income of the company experienced a significant decline between 2024 and 2025, decreasing by $14.7 million. This downward trend continued due to various factors such as public health emergencies, government measures to reduce prescription drug prices, and the company's dependence on third-party manufacturers. Profit margins also remained elusive for the company, failing to achieve or maintain profitability throughout the period. The lack of revenue generation in 2024 further exacerbated this issue. Several external factors contributed to the potential decline in profit margins, including delays in clinical trials, regulatory approvals, and changes in regulations. Additionally, government agreements with pharmaceutical companies using most favored nation pricing, increased generic and biosimilar drug entry, and state-level legislation controlling pharmaceutical product pricing posed significant threats to the company's profitability. The specific data highlights a net income decrease from -$89 million in 2024 to minus $103.7 million in 2025, indicating a worsening financial situation for the company. This decline can be attributed to the cumulative effect of various challenges faced by the company, including those mentioned earlier. The company's debt level and interest expenses have shown stability over the past 2 years. According to the report, as of December 31, 2025, there was no outstanding debt, page 99. Furthermore, total liabilities remained relatively stable at $16,568,000 in both years, page 103, indicating a consistent financial position. Additionally, the net cash used in operating activities decreased by $2,891 from 2024 to 2025, page 107, suggesting that the company's financial performance has improved. Overall, there is no significant change mentioned in debt level or interest expenses throughout the report. The management is expressing caution about the company's outlook due to several factors. The company expects to incur significant losses and negative cash flows for the foreseeable future, which will require substantial additional capital to develop product candidates and fund operations. This capital may need to be raised through equity financings, potentially diluting ownership interest of stockholders. The management is also uncertain about obtaining regulatory approval for their product candidates, which will impact revenue generation and financial performance. Research and development expenses are expected to increase substantially over the next several years as they advance product candidates through clinical trials. The company's focus on long-term growth is evident from their significant net operating losses and capitalized research and development costs. Despite these challenges, the management remains committed to developing their product candidates and commercializing them. However, they acknowledge that there are potential risks and challenges facing the company, including uncertainty around regulatory approval, capital constraints, and competition from existing and potential future products in the market. The company has made several significant acquisitions and divestitures in recent years. In terms of acquisitions, the company has merged with former ENLIVEN twice, first on October 13, 2022, and then again on February 23, 2023. Additionally, it acquired third-party proprietary rights and licensed third-party intellectual property rights. However, the date for one merger is not specified. On the other hand, the company has also made some divestitures. The ENLIVEN-2 program is no longer being pursued, implying that the company is exploring strategic alternatives or has already divested this program. This decision was first mentioned on page 26 and further confirmed on page 31. The company's financial activities have been a subject of interest for investors. One key aspect is its dividend policy, which has been explicitly stated as not paying dividends, page 87. This decision suggests that the company prefers to retain its earnings and invest in growth opportunities rather than distributing them to shareholders. In contrast, the company has engaged in share buybacks, indicating a commitment to returning value to its investors. By repurchasing shares, the company is effectively reducing the number of outstanding shares, which can lead to an increase in earnings per share and boost investor confidence. Page 119. Supply chain disruptions pose significant risks. The pharmaceutical industry faces numerous challenges that can disrupt supply chains. One concern is the reliability of contract manufacturing organizations, CMOs, which may be unavailable or unreliable, as mentioned on page 8. This issue is further exacerbated by third-party providers' inability to produce sufficient quantities, FDA's increased scrutiny of foreign drug manufacturing facilities in China, and uncertainty surrounding FDA operations under the current administration. Regulatory requirements also pose a significant challenge. Establishing sales and marketing capabilities can be difficult, particularly when dealing with differing regulatory requirements across countries. Disagreements with foreign regulatory authorities, changes in government policies or regulations, economic weakness, or political instability in foreign economies and markets can all impact supply chains. Geopolitical developments and conflicts in regions where clinical trial sites are located also pose a risk to supply chains. Furthermore, tariffs and trade restrictions can have adverse effects on the industry, making it difficult to obtain necessary inputs. The potential for delays in clinical trials due to insufficient funding or collaborators' discretion in determining efforts and resources adds another layer of complexity. Overall, these challenges highlight the need for pharmaceutical companies to carefully manage their supply chains to mitigate risks and ensure a stable and reliable flow of products. That concludes the financial summary for ENLIVEN Therapeutics Inc. Feel free to comment below, and I will be happy to answer them when possible.